everybody. Welcome to today's live stream. We definitely have quite a bit to go over today. I'm going to kind of clear out my charts a little bit and do some analysis. Being that it's Friday, I'm not overly eager to take a position. Well, let's look at a couple things. So, like I said a while back, well, all week, I've kind of said that I've been a little bit more biased towards shorting. And here's the thing, let's just go ahead and remove a bunch of this stuff here, and I'm just gonna totally clean up a bunch of my charts, and we'll spend some time doing all that. Here's the thing, when you guys see a setup, okay, for example, like this rising wedge, a rising wedge doesn't hit 100% of the time. Okay, let's say that 80%, 75% of the rising wedges that you take and you short, they play out and you make money, right? Well, that 25%, maybe 30%, who knows how much it is, right? The actual figure. And you can record that using your trading journal if you want to. But there are those times where you're going to get stopped out and it's not going to work. And so, like, I've been short bias for, like I said, kind of the last couple weeks here, and I've been trading swing failure patterns. I've been trading the rising wedges, a lot of positive delta, trapped longs at the highs, etc., etc. And I've essentially, in the last couple weeks, I've virtually broke even, with the exception of yesterday. I did lose out on that because I did not get to take profits on any of the shorts that I took here. Unlike some of my previous ones, I managed to take some profits at the very least, but the one yesterday, I absolutely did not, and I did get stopped out. Now, the thing that, when these kinds of things happen, what I had to remind myself of last night, and what I want to remind you guys of, is that you have to trust the process. And what that means is that you build a system that when you see a rising wedge, you take a short. Okay, when you see a swing failure pattern here, and again here, right? When you see a swing failure, you take the trade, right? Now, does it play out every single time? No, it does not. And this is part of, this is the part of the system where it gets hard for people to, really stick to a system that works, right? So for me, trading swing failures, trading wedges, trading channels, and trading off the 618. Doing things like that gave me a system, right? I use these as a part of my system that tells me when I should be taking trades. Now, in the month of March, taking those exact trades and risking 2 to 5% of my portfolio per trade, I managed to get my portfolio up by 174%, right? And that's in the month of March. So March was great. I had great edge in the market. The market was respecting my levels, and my bias was correct. Right now, in the last couple weeks, my short bias in trading these rising wedges, the swing failure pattern, back testing 618s, haven't been as successful. Like I said, I virtually broke even, except for here I have lost some money on, right, on this massive pump to the upside. And so, like, what does that mean? When it comes to your system, like I said, your system is going to have a win-loss rate, right? And as we've reviewed in the as we've talked about in the risk management tutorial series, the few videos that I put out that are on my website that if you have not watched, I 120% recommend that you do. What we talked about is that you can be profitable in trading with even a 40% win rate. That means that the equation to be a profitable trader takes into consideration losing 60% of the time. Now, if you're really good at making calls, your win ratio can be a lot higher, right? You can get your win ratio to be even above 70%, where you're losing 30% of the time. And that's right around where mine rests. And what will happen is, for me, like again in March, I went like on a 10 or 12 trade winning streak. It was insane. Like I literally just could not lose. I vividly remember thinking to myself, I better enjoy this and I better, make the money while I can, because I know around the corner I could have a string of losses. And that's, virtually what has happened over the last couple of weeks. Now, again, the difficult part that I want to stress and talk about is that if you have a system, you have to stick to that system and continue to take these trades, even though for a time you may have a string of losers and you say to yourself, oh my God, my system's wrong. I have to totally change it. I need to do something different. That's not the case at all. You can stick to that system and understand that those losses are going to be a part of it. Now, what you can do, for example, in here, when I took this swing failure, and at this point the swing failure was invalidated because we should have started closing below and having continuation to the downside, and we came down here, I posted in the Discord that I closed a partial of my BTC and ETH short, right? I was pretty heavily exposed up here because I was anticipating a breakdown back into the wedge for continuation to the downside, and this is something that we've seen many, many, many times before. But when I wasn't seeing, oops, here we go. I'm just gonna, there we go. When I wasn't seeing the breakdown, not only that, but then what did we do? We got the daily close above the swing high, which would AKA also be, look at this 4-hour candle here where we closed above what was supposed to be the swing failure pattern high. When I saw that, and not only that, but when I saw that we had all of these reasons to start going down, the wedge, the swing failure pattern, a lot of positive delta, but price was slowly grinding up, right? What we were seeing is that sellers were not showing up. Sellers were not interested in selling here. They wanted to wait for higher prices. And when I was looking at this and I kind of saw that happening, I thought to myself, God, it really feels like we could get a big candle here. And I posted in the Discord that the daily close was super bullish. I posted that I de-risked my positions, and this was the reason why. And truth be told, I should have been a little bit more aggressive and just closed them entirely, because ultimately my short trade was invalidated. And I'll be totally honest with you, I was a little bit married to the position because I wanted to see it go lower. And again, I wanted to trust my process. But what I wasn't seeing, and I was seeing it, but I didn't, go full send on it, which was to close my position, because I wanted to trust that it would sort of play out, right? And you know what else I wanted to do too, which would have been actually a really nice play. I remember thinking this last night. So I was short from 2011. And I remember we got this drop down and price was sort of messing around in here. And when we got this closure above here, I was like, you know what? This is totally, like I said, I felt like it was going to send. So I closed. I closed partial of my position, and I even considered longing in here with my stop below here at a hedge with a stop here. So if I would have gotten stopped out here on my short, my long would have ran. If I would have got it stopped out here on my long, my short would have ran. And I decided not to do it at the time. It was late at night for me, so I didn't really want to mess around with my trade. My trading day was virtually over. But looking back on it, these are some things that in my trading journal, when I see these kind of triggers again and I have these ideas, now I'm prepared for the next time to go ahead and do that. And again, that's why I emphasize the importance of keeping a trading journal and knowing these things so that you can be positioned and prepared, the next time that you see something like this, where it invalidates or or otherwise doesn't quite fit the narrative of your trade that you're looking to take. Okay. All right, cool. So that's great. Yeah, so my BTC, ETH, obviously all of these I totally got stopped out on. We're going to gosh, I don't know if I want to start with BTC or ETH. Let's go ahead and let's look at let's start with our higher time frame BTC. So, as we've talked about, I'm looking for something basically kind of like this to happen. We can see that we did not get this little drop here, so we'll go ahead and delete that one. But something like along these lines where we come up to here, we retrace, we come back up, we backtest into this zone, and then we get our more significant move down, aka the end of our, what would then be the end of our bear rally, which I actually do think, I've seen a little bit of this going around online, so I'm a little bit hesitant, because if enough people believe it, then it's not as likely to happen. FOMC is May 3rd. FOMC May 3rd. I think it's May 3rd and then sometime in... okay. So the next FOMC meeting is May 3rd. Okay. All right, so let's go ahead and we'll do a little clearing out on some of these charts here, and we'll take a look at where we're at. Just going to go ahead and hide all of this. And start totally fresh. Okay, so just looking at this nice and fresh here, let's go ahead and I'm actually going to remove all of my alerts. And we'll go ahead and start doing a little bit of a deep dive into the charts here. So my opinion on BTC, I've said this before already, but I most definitely think that the bottom is in. I do not think that we're going to rip to new all-time highs. I do think that at some point here, again, like I said, that 35 mark, I'm expecting a a decent sized pullback. Let's actually go to this chart. I really liked, how far back does this go? It goes back far enough. Okay, so I really liked using this chart as my macro analysis chart. I think it's been really nice. Actually, I'm going to just highlight this area so we know that this is sort of where we have that cross. Actually, let's just use okay, X marks the spot. Let's take a look here. So what's really cool is we can see, and I talked about this in one of my tutorials, my fib time tutorial. Oops. So to the week, it was the same amount of time. We can see the bear market from here to here was the same amount of time as the bear market from here to here. I don't think that that's a coincidence. I think that that's a really important thing to acknowledge. So let's do something similar and say the bear market rally extended from here to here. And now let's go ahead and extend that to our current low, which is here, which brings us to the end of May. All right, so that's right around where we cross here. So I like that a lot. I think that that's a very happy coincidence. We can go ahead and see. Yeah, you can see, you know, maybe if we come to here in this week, you know what? I'm actually going to go ahead and move this over here. I like that. I think that that could be the end of our bear market rally. Let me, yeah, so I think that that would be a really good zone for that. All right. Yeah, and this would be a really nice resistance area. A lot of confluence. Okay, cool. I like this spot. This is probably when I'm going to look for more of a macro swing short. Okay. So we have that in mind. Ooh, price is looking like it could deviate the previous range value area high. Let's go ahead and get back to our primary chart here, and I'm going to do a little bit of cleaning up, but I just want to emphasize you guys really should mark on your calendars to make a note that, you know, the week of Monday, the 22nd of May, that week, if you see price, I would say the week before or the week after or that week specifically, if you see price trading at about 34, 35, 36K around that time frame, you should be thinking to yourself, man, this would probably be a great time for a swing short. Okay. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 2, 3, 4. Yeah. So keep that in mind. Mark that down. May 22nd, that week, give or take 34 to 36K if price is trading in that area. I would really be looking for a short. Okay. All right, let's go through all this shit and start cleaning it up. Don't need that. Let's go down to a lower time frame. Do not need these anymore. Fib retracement, do not need that. I don't really need this. Longs that we never got to. I'm going to go ahead and just delete all of that. We can clean this up. Trend line. This is a really nice trend line. Okay, so we'll go ahead and hang on to that. As a matter of fact, we'll go ahead and put in here. This is our current channel, so this is our 30K channel. This is a potential channel. I'm gonna get rid of that for now. This is an up channel. Just leave it there for the time being. Horizontal ray, RSFP. I'm gonna dive into that later, so I'm just gonna get rid of it. I think that this is an interesting line. Maybe we'll go ahead and label some of these shortly. Short positions, these were old. I don't even know what those are. Those must have just been old positions that we were looking at. Looking at this long from down here, I already have this recorded into the Discord, so I'm not going to worry about keeping it or hanging on to it. Get rid of that. This harmonic did not come into fruition. Go ahead and remove that. I don't need either of these trend lines. I still like that zone. Still like that. Don't need that. Don't need that. Do need that. Some old plans, we can see we did not get that move down here that I was looking for. We instead had continuation to the upside. Could entirely be possible that we see, you know, well, let's. Yeah, it could entirely be possible that we see a sweep of these lows for then continuation to the upside. Something to keep in mind there. Our liquidation levels. This one got taken. We don't need that anymore. So we still do have quite a bit of liquidation to the downside. 29K short. This we managed to get our take profit 1 over and over again, and we know how this played out. I kind of talked a little bit about that. Our naked point of control, that's not supposed to be there. Exo charts, it's not working for me, is it? Okay. Sometimes TradingView just does not want to play ball. There we go. Group 1, okay, we talked about that. Liquidation levels, I'm going to put that in here. Plan. This played out really, really well, right? Because we got our long here, our short here. We hit our midpoint, but we didn't actually get the extension, right? So that is done with. Elliott Wave, this did not play out this way. I'm actually kind of wondering how I want to redo this here. I'm almost thinking maybe I really don't like this Elliott Wave at all. I think that this does not look good. One, two, three, four, five. 1, 2, 3, 4, 5. So this would likely more or less be A, B, C, D, E, no. C, A, B, C. I'm gonna have to do a little thinking on this. I don't think that this count is right anymore. So I'm actually just going to, I'm just gonna look at one thing quick. I'm gonna take a brief look here. Where is it? Here we go. All right, well, at the very least, what could kind of maybe make it valid is that at the very least 3 is not the shortest wave. Still, I think this is super ugly, and I'm not really a fan of it. I'm just gonna delete it. Local lines. Let's get rid of some lines that we don't need anymore if we have some. Don't really need this one anymore. I don't think we're gonna need this one anymore. Not particularly interested in that one. I think this one's interesting. I'm willing to keep that. This one obviously is very nice. Yeah, I'll tell you what. I mean, just looking at this, like zero thought, not really doing whatever. These lows will get taken. These are begging to get taken. Um, here's kind of the thing. If you look at this, this is actually golden how they did this, how price behaved here. This is just pure gold. All right, so you'll notice here we have very similar price action. What would you expect? Well, you expect the lows to get swept to do something like this, and I'm sure a lot of people did, actually including myself. I most certainly did. So what did they do? What did price do instead? Well, just simply went up. Now, in my opinion, what that means is that we're probably going to then get a larger retracement when the time comes. Now, it's just a matter of, it's similar to all of this, right? This was just, I mean, relentlessly down with very little like retracement. This can be relentlessly up with very little retracement, right? And for the most part, I mean, it has been, with the exception of this one. I mean, we could quite literally just do something like this before then, putting in some degree of a macro range, and then coming down to sweep all of it in one go, right? So, although in a perfect world, yes, I would say that these all should be swept. Like, 100%, I think that that should happen. It doesn't mean that it absolutely has to, given the state of things here, right? All right, so let's go back to daily here. Local lines, X marks the spot. Get rid of some of these here. Local ranges. I'm going to clean this up. I feel like we have a lot of shit going on in here. I don't think we need this anymore. So we have to keep in mind that the majority of people are positioned here. Since all this price action all the way to here, to current, the majority of people are positioned here, as well as here, and now a lot of positioning here. So we can see that this was your primary accumulation zone. Here acted as another accumulation zone, and then here acted as another accumulation zone. So these areas we can expect to act as support in the event of a downturn, right? You can see sort of these shelves, right? Areas that you can expect very much not to act as support would be in here. So this would be a nice volume gap to fill. If we were to see a move down, this would be a nice volume gap to fill and then have continuation to the upside. So I'm very much into this area. I'm going to mark this out. Should probably keep it green actually, because. All right, so this is a nice volume gap. All right, so we like that area. Cool. Just gonna get rid of that for now. All right, let's look at some of these ranges here. So this was a great range. All right, I'm just gonna expand that range a little bit. I think that this is a bit more appropriate. It's a little bit cleaner, and we can see, you know, how respected it all is. So this is nice. I'm going to redraw that as such. All right, so this range here, I don't need that one anymore. This is an extremely key range here that we can see that we've left. Do not doubt that this would act as a great level of support in the future. All right. Gonna get rid of this one. This is the equivalent of this. This is our key sideways range. Our 24K range, great. 23K range. Our 20K range. The upwards channel is similar, however, to nope and nope. This was a tight up. We can see that this one's been really well respected. Sure, this is worth keeping up here. In the event of maybe a sweep of, let's say, this low here, this would bring us to about maybe that 23K. Yeah, if we were to see a really big move down today, this could bring us to that 29.3, which would be a nice little area to look for a long for sure. All right, cool. Our downwards channel, let's see what that is. This is going to get deleted, and so is that. We have a couple new channels. This one here, does this line up with? Does not. This channel is very, very nice, and one that I am going to start trading. I think that this one's really worth trading. Tradable. Go ahead and throw that in there. All right, so all of that looks great. Okay. So this was my old macro plan, to which I was planning on, you know, getting this move down, move up here, move back down. And really, I mean, should have been here. Go ahead and get rid of that. Let's extend these over. This is some very old analysis. We could see that we have so far deviated above this major resistance. We've deviated above it so far, right? The low of that resistance is here. This is, you know, this major resistance, this is the value area of this zone, right? So I've had these levels marked out on my chart. This is just an easier, faster way of looking at it. So that's something worth keeping in mind. Go ahead and get rid of that. Short based on time. We never really hit any of these. This one was pretty close. We did get that move down. This one's pretty close. I'm gonna get rid of those. These are all of our old CPIs. Someone was talking to me about CPI and how every time you get the CPI, it goes up. As we can see that it's not true. As a matter of fact, it marked a lot of tops. But now that we're in a bull market, we could see that the CPI is marking a lot of bottoms, right? It's just a different, I shouldn't say bull market, but upwards rally, a bull rally, right? Order blocks, let's pull these up here. So this, okay, well, we got to start getting rid of some of these here. This one, I'm going to remove that one. This one is just so key. I didn't want to get rid of it. That one's still untapped. This one we can get rid of, right? If an order block has been tapped, it's no longer needed. Get rid of this one. We have all these ones from down here that will probably never get hit. I'm only going to keep this one because look how key it was. It's a super key zone. We do have this H4 OB that did get tapped. And now we're in this much larger order block. And I think this is a weekly order block. So if we go to our weekly time frame, this is technically a weekly OB, which we can see here has been massively respected. And I would expect probably, you know, being that this is the high, you know, sort of our target would be to take this and then maybe come back in here and range in this zone or have, you know, something of a move down. Yeah, I really like that OB. Let's pull up our fair value gaps. A lot of these I think have been filled. So we have this one here that, I mean, just look how well respected these can be. Look at this. Literally perfectly filled. To the top would have been your perfect short. I mean, it's just, yeah, it's perfect, right? This one here has been filled. We have one here that's not filled. This one has been filled. We have one here that's not filled. This one has been filled. This one has not been filled. This one was. This one was not. This one acted as support. I'm going to remove that. We don't need it. I assume we don't need these. I'll keep that one. Yeah, so if you guys recall, this fair value gap is also our volume gap. As you can see, this will get filled. I am extremely confident in this getting filled. And as a matter of fact, I would look at a long position here for sure. I'm very, very confident this will get filled. And in fact, I believe that price will spend some time here. I think that in the event that price does get a move down into this zone, I think that we'll range here for a period before maybe then getting continuation. If this were to happen, right? If we were to come down in there sooner than later, I would really expect us to range in that zone. So keep this in mind. 25,300 to 26,600, give or take. That zone is extremely, extremely important. I do think it could provide a good trade. Let's look at our bars here. Let me get rid of all these. All right, our SFPs. This one's done. This one's done. We can shift this one over to here. We have these ones here. We have that one there. You could argue maybe that this one could be an SFP as well. Possible location for a trade. These ones get kind of messy. Yeah, so these are all of our local SFPs. Maybe we can put one here as well. Yeah, I would say that's probably it for our key swings. Let's just look at... Yeah, you could probably make the argument for this one. Yeah. So we'll go ahead and mark them there. These are our immediate zones. All right, we'll get rid of those. Elliott Wave. 1, 2, 3. We didn't really get much of a 2 though. And I was looking for 3 to get put in. No, 4 to get put in here, which would have been our total 3. Yeah, I just don't like this though, because we didn't really get that retracement I wanted. And we're definitely not going to go down here, because that would be the start of a whole new... We can't take out 2. In fact, we're not even supposed to take out 1. So yeah, 29,300, and then another move up. Boy, that's ugly. It's a really ugly Elliott wave. I don't like it at all. Yeah, I think 29,300 zone, and then 32. Yeah, I'm not a fan of those at all. Let's do this though. I just want to look at again from here to here. If we were to have Yep, I really like the 35K area still. All right, so where were we looking? We were looking at this Elliott wave. I think all this is super ugly right now. But nonetheless, you know, we could see some kind of a, like I said, 29.3 to then 32 to then from there, you know, to really have that larger retracement back to the 25 zone, something like this. 25s for then our last rally. Actually, let's go ahead and hide this. Say we were to top out. Say we were to do something like this. And then we did do something like this. Hmm. Probably not though. Probably just come back to here and postpone it again. How messed up would that be? Yeah, how messed up? How messed up would this be? So see these lows here and how I say we should definitely take them, right? So basically this volume gap I want to fill. What if price does something like this, does not take the gap, goes to here, then sweeps right through it? It's interesting. All right, had that. This Elliott wave. Yeah, so this was one where I was looking at this more like an A, B, C. And then once C is put in, we would see a 1, 2, 3, 4, 5. You know? I think it's interesting. I don't think that this is... One, two, three, four, five. A, B, C. Yeah. I'm going to revisit that, but I'm going to get rid of it. Let's go to our 12-month chart. I have not updated my yearly values, so I'm going to do that now. Previous year low. Previous year value area, so I'm just gonna throw that there. Previous, so yearly opened here. Previous year point of control, which we'll mark out. Previous year value area. Previous year high. Let's see if I can do this on here so I don't have to dick around with Load. I can't. It's okay. We'll go to our daily chart. And we're going to use our fixed range volume pull, and we're going to go to January 1 and draw that to December 31st. The previous year value area low, which is here. The previous year value area high, which is here. And the previous year point of control, which is here. Okay, the low and the POC are virtually the same. I'm gonna get rid of that because we don't really need that. The yearly opens down there. Previous year point of control, previous year high. Cool. Good to know. Nice to have those updated. Let's go to our monthly. We have this all marked out. Previous month high. Yep, 29,300, 29, the 29,200 zone. I think this would be a good area to backtest and consider a long. Hmm. We gotta get rid of some of these. That is very interesting. Wow, this is an interesting level. Look at that. Held is might keep that. This is an SR. Oops. Don't need that. Has this daily level been tapped? Yes, it has. Kinda pretty damn close. We'll keep it. Daily, that held up pretty well. And we do have that daily there. I could say that we technically have a daily here. And I'm fine to put that on there. 27. So these are our horizontal levels. I don't think that this is necessary here. And on a weekly time frame. Fuck, look at that fair value gap on that weekly. Price is gaining acceptance back into the value area here. It's very interesting. It's a pretty big deal. It's a very big deal. Point of control and the 618. Boy, that is a big, 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 big resistance. take a look at our NPOCs. There's no way that all of these have not been tapped yet. I'm sure this is tapped. I'm sure this is tapped. Oh, shit. Oh, that is an NPOC. Okay. Tapped, probably. I don't know. Let's take a look, actually. Monthly. The only untapped monthly is the 22. So 22, any other ones? This is a very old one, very old one. Probably never ever get tapped. Okay. All right, cool. Let's look at our weekly. 27.8, 24/7. So 27, 24, 16. So I don't have the 27 one marked. So 24, 16. Okay, great. The 16 one we obviously don't need on here. Probably don't even need these daily ones, to be honest with you. Especially because there's a weekly one right there. There's 2 of these here. Let's look into that. I'm going to mark out that clone. What is it? 27. 870. 27, 870. 27, 870. Perfect. Let's go to our daily. Okay, let's see what we got. 28, 27, 26, 24. So 28, 27. Hmm. 28, 275. 28, 275. 28, 275. 28, 275. 28, 275. 27, 850. Don't need that one. 26. 26, 875. 24. 2020. Are these 18s still there? Yes, they are. Okay. So 1818, great. These can stay. We don't need them though. These two are fine. They can stay. We don't need them though. The NPOC here, great. NPOC here, we'll just go like this. Text plus DNPOC. Go ahead and hide that. This is also untapped. Don't need this one right now. Ooh, geez, let's get rid of all those. Holy shit. The only ones we need are 28, 26, 27, 24. We don't need the 24 on there. We don't need this one. Yeah, we don't need this one. 34, I wouldn't mind keeping. 22, don't need. Okay, cool. Super key trend line, 40K. Okay. Very interesting trend line coming up on that one. Nothing really overly interesting right now here. Let's look at these trend lines. Yeah. A lot of these channels I can probably get rid of now. Matter of fact, I can probably get rid of all of them. It's one way of drawing it. Guess what? Look at this. Matter of fact, I'll just go ahead and draw it. Top, bottom. Got it. a matter of fact, instead I'm just going to draw this as a trend line because I only need the bottom one. Boom. Look at that. More confluence for that week in May. Yep, just added confluence for this zone. It's great. Something else to keep an eye on. Okay, cool. Ooh, this is a really nice channel. Yeesh. I'm gonna try trading this channel. Done. That played out perfect. Definitely wish I would have caught that. It's a macro harmonic that I've been interested in. I wonder. It's also the 382. Ooh. There's also the 382. So if we did a 382, say we did a 382 bat harmonic and we went full send on it. Oh man, I just don't see us going back that low. Say that to this 618. Also this monthly. Where would it be? The 786. 786, but that's if we want this to be a, I'm looking at this to be an extended. So what can be extended with a 382? That would then be a 1618. 161, that'd be 5. It's over. It's way, way, way over. No, so this would definitely have to go deeper, and it couldn't go deep enough to make this work. I'm gonna shark. No. I don't know. This one's not really looking that great anymore. This would have played out too quickly. This is the reaccumulation. Don't really need the fib retracements anymore. Nope. Nope. I think the one thing I would draw in here would be full. And we'll go ahead and flag it. So our flag is at about 36K, or our dead cat bounce, I should say. So that's cool. Let's get rid of that. Fib fans, I'm not particularly interested. I'm not really interested in that. All right. All right, we'll see if we can I'm gonna I know this is a really long video, but I wanted to do a start to finish analysis and kind of dive into some things here. Maybe I'll do some kind of a recap later or something like that. But I'm just going to take everything that I looked at right now, and I'm going to look at some hotspots on the chart and try to determine kind of the best course of action on like these, you know, kind of higher time frames to see like where we can kind of get a general bias towards and what we'd like to trade at. So let's look at our 1 month. All right, so we grabbed a lot of liquidity. We have a shit ton at that 25 zone that I really, really like. Okay, 27, 29. Okay, so basically our key areas are the ones that I've pointed out. So 29, 150. We want 27, 200 zone in here. And then the last one being, of course, and especially the 25, 200 zone. So each of these are really key areas in my opinion. Let's look at BTC here. Hmm. 25 billion. So 29.2, huge area of liquidation, the 29.2 zone. Yeah, I think that 29.3 is our very first stop if there is a move down. So let's go ahead and look at that. Go to a 4-hour time frame here. Let's actually pop on a daily real quick. I do want to draw this if I don't already have it, which I don't. We're going to mark out this volume gap. Actually, I'm going to mark it out as the fair value gap. We're going to mark another one out. Okay. I almost think that this would get filled. We could just wick. Yeah, we could just wick. Okay, cool. Hop over to our order blocks. Nothing on a daily time frame overly interesting to me. Go down to a 4. Yep, nothing really interesting here. There's a 4H4 OB here at the naked point of control that could act as support if price were to fuck about. Hmm. Let's look at these two, which one we like more. You have this one, which we deviated the high. We're getting acceptance back in. We can look to trade it down to the bottom of the range, which could be 20. Or we trade this range and we say if we go down to this 29,200 area today, what time is it? If this happens today, I may take a long position here. I would be also interested early next week. Like I said, I kind of want to put in a top next week. I think it would be great to come down here and then put in that top and then come back down. So yeah, I would look to long this area. If we do get that today, we have to ask if we would fill this fair value gap all the way, which would make me think that we would go lower. We'll have to keep an eye on that and just see how price reacts here. If it holds here, I may be interested in taking a position. I might be. We'll have to wait and see. So here's the deal. If price gets down here and it holds this area of support, I'm interested in taking the long position here. If we fall through, in this one, I would prefer, but price has been sort of fucking about. So I would really prefer like this 28,800 zone, bottom of this channel, also this trend line. We come down here, we find it a support, and then we trade it back to the top of the channel for putting in our high next week. And then we would look for some degree of a larger retracement. I would actually really like something like this as far as setups go. So for me, you know, yeah, in here or in here would be my next two levels. And I would really like for that to happen either today or early next week to hit these sort of zones to then trade them. You know, I like this one because we deviated above here and we're gaining acceptance back in. So you can obviously trade to the midline and to the bottom of the channel. It's worth keeping an eye on. But I also do like this one because we acted as resistance here, we can see, and we have an opportunity to flip this resistance here into support, right? So I do like that as well. So we'll just sort of have to keep an eye on both of these levels. Going to set an alert here. We're going to put this at 300 actually. So consider long to 30K plus. Create. And I will put another one here, add alert. Fill fair value gap to 28,600. Long to 30K plus. Gonna set an alert here. Okay, so we like that. That looks good. Yeah, that's also the top of the previous range. All right, cool. Well, let's see which one of these we get, and we'll look to consider a long position there. And we'll take it from there, okay? Again, it's Friday. I don't typically like opening new positions on a Friday, because chances are you'll be able to open that same position up on Monday. Funding rates are largely positive, especially on ETH. So, you know, very briefly, I did take a short here on Ethereum that I'm looking to trade down to about 2030. So I do have that marked out. I talked about that in the Discord today. Otherwise, yeah, we'll just sort of, you know, we'll play this by ear. It being that it's Friday, you know, again, I'm not like crazy interested in opening up a new position here. But again, if we hit one of these targets very quickly today, I may look to, at the very least, take a scalp, maybe, you know, prepare and enter for some degree of a position. I do want to mark out just the point of control here. POC. Clone. And I'm going to mark out the Va and POC. Okay. Let's just see how that all looks over here. Yeah, so we rejected, basically deviated above the value area high here. We're now at the point of control, which is also a naked point of control, a daily naked point of control that we have here. I wouldn't be surprised to see some degree of a bounce in that zone. Yeah. Okay, cool. Well, I think that about covers it for today. Again, I'll look to do some more actionable pieces here that I will share with you guys in the Discord after, taking a look back. Thanks for bearing with me. I know this was a super, super long, live stream compared to my normal ones. So thanks for bearing with me on that. I know that we didn't get to spend a lot of time on ETH, but ultimately, I talked quite a bit about ETH in the Discord this morning about how, funding rates are largely negative. I'm looking to take this back down to about the 2030 area. So if you guys saw that, great. We're about nearing a point that we would want to take some profit. We can see here that this this single print here is just about filled. It started up here at about 2080 and it goes down to about 2030. So I'm basically just looking to fill that single print, take some profits, and then, look forward to this upcoming week for some more, hopefully for some more volatility, right? Yeah, so this could play a new range here. So we'll just have to keep an eye on these levels, and we'll go ahead and talk a little bit more about it in the Discord. If you guys have questions, feel free to ask there. Otherwise, I'm going to go ahead and cut this off here. Enjoy the rest of your day, guys. Enjoy your weekend. It's really important to take time off from trading, especially this week. It's been been really busy with trading, right? So do take time to relax, spend time with your friends and family, and the charts will be there for next Monday. Monday we'll have our usual Monday morning live stream, in which case I will have some very actionable pieces going into the week ahead. I do think that we're going to be provided with some pretty excellent trades, so do keep that in mind. All right, we'll see you in the Discord, guys.